The profit and loss, it leaves off so much stuff. And so let's talk through that, right? So we see income, we'll see our cost of goods sold, what we have to do business. And then we'll also see like general operating admin expense, everything else, right? Rent, payroll, all of the things. We always look at that and we go to the bottom, right? So income, COGS, my expenses, I have a positive number, it's $1,000. I'm a profitable business. That's usually where it stops for a lot of people. The problem with that is, let's use the example. You did $100K in revenue, $90,000 in expenses. You've got a net profit of $10,000, right? That $10,000 does not tell you anything that happened on the balance sheet, right? So one of the biggest questions we get, especially starting out with a new client, is, Steven, my profit last year was $100,000. Where is that money? It's not in the bank.
Yeah.
It's on the balance sheet usually.
Hey guys, you cannot grow your business if you are flying blind, and especially flying blind financially. I'm here today with my new friend, Steven Davis from Satellite Strategies. We are going to dig into the weeds about a topic that's very important in small business. It's finances and the numbers that you need to know and get in front of to grow and run and lead a successful organization. Check it out. Are you a faith-based father and looking for intentional ways to connect with your son in a big way? If so, you have to check out the Father-Son Hike of a Lifetime on the Camino de Santiago in Spain. June 2025, I am taking a group of faith-based fathers and their sons over to Spain for 9 days and the adventure of a lifetime. Go check it out at mattshoup.com/Spain. On that page, you'll actually see all of my upcoming Spain adventures, but make sure to check out the Father-Son Hike of a Lifetime. Steven Davis.
Thanks so much for having me.
Thanks for coming here.
Yeah, super excited for today.
We just met under some really interesting circumstances.
Yeah, totally.
Yeah.
It's been a long week and a half, right?
Yeah, very, very long, early mornings, late nights. We've been talking a lot.
Yep.
And you and I both came to the conclusion that it's way better for businesses, many businesses, to find a professional company to take care of their bookkeeping, accounting, payroll, finance, CFO planning. That we'll leave it at that.
The accounting role, right? There's so much to it. And that's the whole point, right? Is that we see it happen so many times. I would say on average, maybe we're taking one client a month right now.
Yeah.
That one client a month, 95%, we're replacing somebody that's in, a front desk manager, office manager role. And there's nothing against these roles, right? They're fantastic roles. You have to have them. One of the most vital pieces of your organization is that front desk, right? Who do you see when you open the door? The problem that, we keep running into again and again is that a lot of these businesses, have this person who is maybe great with their people, but also is handling some roles like maybe it's bill pay, paying the rent, receiving some payments, payroll, sales tax, the list goes on, fractional CFO, strategic advice. And what we've seen time and time and time again is that, and nothing against them at all, but for me to get to this point where I am right now, I have an undergrad in accounting. I got my master's in accounting. I worked in firm accounting for about 4 years, just day to day. How do we do it? What does it look like? And, it took a lot. And I think one of the things I'm most proud to say is that I'm learning every day still. And I know a lot about accounting, and I know, how to create a great set of books for you and explain your financials, but everything is changing every single day. And I think that kind of relates to why it's just so important to have that person who, does have a little bit more of that insight and education and background, because of, the seriousness of some of the things that, your accountant is touching and handling. It's, it's your money, it's your life. Yeah. It's a big deal.
Well, when you came in and, we just started going through everything, just going through the checklist, right? And you're like, we need to clean this up, fix this, move this. Like there's just incorrectness and a lot of this stuff. And I'm like, dang, I was beating myself up a bit. And then,
right.
You said something really insightful where I don't feel as bad, but it's just really common.
Yeah.
Right? Like the mom and pop business, you start a business.
Right.
The solopreneur, they're doing everything, the sales, the marketing, the delivery, they're getting the payments. They're trying to figure it out. So many businesses, I coach them. I go, hey, send me a P&L. Huh? Yeah. Like, well, here's my bank. I have money in the bank. They don't even have a P&L.
Right.
Like, go get some QuickBooks online. So I mean, there's half the businesses I know don't even do that.
Yeah.
And then when they do, they start fooling with it, messing with it. They don't understand it. Yep. So, right, it's that front desk or that reception assistant to assist with clearing off their plate. Then they start messing with their money.
Right.
And you can't have somebody messing with your money that doesn't understand. There's a complexity to where it all goes to give you some simple sets of reports to do forecasting
Right.
and plan.
Right.
If you don't have those in real time, you're done.
Yeah.
Like P&L is a historical report.
Right.
But a real great one is going to say, well, based on that and based on this, you should be here, and they're going to forecast for you.
Yep.
Yeah,
Exactly.
crazy.
It's crazy how many people, see their financials too and, not have a true understanding of what it means, right? Like it's great that maybe you do have that bookkeeper or that accountant who's doing a fantastic job for you. Here's your financials every single month. As a business owner, I feel like I'm really good in that area because of my experience in accounting and finance and economics. But, what I've also seen is a lot of small business owners are excellent at their trade, right? So maybe it's roofing or painting or maybe, repairs, whatever it is. That does not mean that, they're really good at finance and accounting and bookkeeping. And so that's another common trend too, is if it's not that office manager front desk, it's, the business owner wearing the 18 different hats. I think Mike McAllowitz says it really well. But you have to be sure that certain things in your business are handed to the right professional. And, quite honestly, Matt, like your time shouldn't be spent, writing checks or, getting rent out to your vendor or whoever it may be. So, yeah, I think there's a big discussion to be had there of, there's a cost. It can be expensive to have an accountant for sure. But there's also a lot that you get out of that could save you a lot of money down the road too,
The cost of not having one. Well, and it's interesting you say, and businesses look at things as a cost and an expense versus an investment.
Right.
And it's like there's things that are just straight wasteful. Like you all don't go you don't all need to go to Buffalo Wild Wings every Friday. Like that's wasteful. But to not investing is different.
Right. Totally.
The money we're investing now with you guys, just in the first week, we've already discovered how many multiples of that in savings strategy.
Totally. And that's the big piece too, right? Is that
and you're not paying me to say that. Like this is reality. Like this is reality. It's not. It's an investment you have to make in your business.
You have to totally.
Yeah.
I think that was kind of our biggest business model, kind of going into creating Satellite. Is that some people do have true good accountants and bookkeepers. My opinion, I don't think that you have that true good bookkeeper unless you're meeting with them, I would say once a month, maybe once a quarter, and they're presenting, here's your balance sheet, your profit and loss, here's statement of cash flow, here's what these 3 different things mean, put them together to create the big umbrella picture. And it's just something that is genuinely missing, I think, in a lot of small businesses.
So I know who the listeners are, right? Like we have a lot of business owners, business leaders. They're just getting started. They're in that let's get started, have some success, and they're starting to scale. You probably just freaked them out when you said that, right? So let's just get back down to the basics. But before we do that, look right here. Give Mike McAllowitz a big shout out because he's a great friend of mine, and I know you're a big fan. So tell Mike what you'd like to tell Mike.
Hi, Mike. Super big fan of yours. Really familiar with most all of your material. I think specifically the Pumpkin Plan and obviously Profit First were game-changing for me starting a new business and establishing, the structure. I think Pumpkin Plan is, Profit First is my favorite because I'm a finance guy and that, hits home. But for me, the Pumpkin Plan was something that I didn't know that I needed it. And we actually got to fully practice that material, create what is your ideal perfect client.
Yeah.
And we had some that were not, and we had to evaluate and release a client. And that was
Throw the pumpkin
scary.
away, the baby pumpkin.
And it was our biggest cash cow too, right? Like it was our biggest paying client at the time. Yeah. And we said, it's not worth the stress and the time or the money that we were getting for it. So, Mike, thank you for the Pumpkin Plan. We fired, one of our bigger clients that was not serving us, and we were scared. That's a big reduction in revenue. The next month of business was our largest month of business in history. So,
and probably your happiest.
It
was fun to fire the ones that are just a pain in the ass.
It feels good after a minute. It does, yeah.
Well, and it's easy to fire one that is low returning or low producing and high stress, high pain in the butt. It is the tough one. It's like, man, it's a lot of money. It's a big account. So I guess we'll let them be crappy to us. That's the tough quadrant to release.
Yeah. The golden handcuffs.
It's so good. Yeah. So back to just the basics, right? So P&L, balance sheet, cash flow statement. So just give layman's term 101. Somebody just started a business, right? Like they got fired from a bank like I did, or they're 3 months into the business. They're taking money and it's getting close to the end of the year. And they're like, you need a what? A P&L? And they're just making sure money's in the bank. Explain what these things are. And just, they're not ready for you yet.
Yeah.
They're not ready for you yet, possibly, right?
Totally.
So what are some basic things they can do just to get healthy and structured before they're ready for you?
It's a great question. I think the biggest thing to chat about here is knowing what the three big financials are that you should be reviewing on, a specified frequency. I would say monthly. If you're a business that maybe is doing, $5,000 a month right now, quarterly would probably be okay. Really extremely minimal on the revenue side.
Yeah.
Quarterly is probably acceptable. The biggest thing is knowing the three big financials. So every finance review that we do with a customer monthly, we're going to look at your balance sheet, your profit and loss, and then a statement of cash flow. And we'll always do it in that order, and there's an exact reason why. So balance sheet, right? You mentioned earlier your P&L, that's talking about historic. In January, I have this income, these expenses, my profitability is X, right? So I know that I was a profitable business, which is great. However, never look at your P&L first. You're always going to start with the balance sheet.
I go to that one first.
Great job.
Do people
you know
historically go to the profit and loss?
100% of time.
Like you want to know
Am I
that you're-
profiting? Am I making
you want to know
money?
if you're profiting,
Am I
right?
not?
Yeah.
The problem is that truly does not tell you. So let's talk about that,
It's
right?
not where your real money is,
No.
though, right? Because
So
you
we've
just
got
you bought a $50,000 truck that you didn't write off and put on that P&L.
There
That
you
came
go.
out of your bank.
Yeah. And so that's something that is not, truly understood, I think, by a lot of small businesses is that we have the balance sheet. That tells us, at a picture in time, where are things at? So balances, assets, how much is in the bank? What kind of current assets, stocks, investments do we have? Then we've got the liabilities and equity. So the thing about the balance sheet is every single number on there can be tied to some kind of report that is a final statement, right? So for example, bank, we've got a bank statement to tie to. Credit card statements, loans, all of the things, right? Start with your balance sheet. If you run that, let's say 12/31/2024, you've got all of your bank statements right here beside you, and you've got your books right in front of you, right? If you look at your balance sheet, go down the list, and that does not match exactly what you have on that bank statement, something is wrong, right?
Yep.
So think about the bank account. If we're supposed to see 10,000, our books say 9,000. That means somewhere in the books we have a $1,000 expense that's uncleared. Maybe it's duplicated. Could be duplicated or something of that nature. But
Or a $16,000 one.
yeah,
Or a
sure.
$4,000 one. Or a $22,000 one.
Yeah, the numbers, it can be different depending on the business and the severity of the situation for sure. But yeah, I think the biggest thing, start with your balance sheet, right? We know where those numbers come from. We've got a statement to tie out to it. If we look at it, everything matches. Awesome. Let's go to the P&L now, right?
Yeah.
So the balance sheet, that's where we check for accuracy.
It'll be balanced. You just got to have
balanced,
everything
right?
cleared, because if not, then your P&L's not
Exactly.
right. Yep.
So the profit and loss, we'll go to it next, typically after that balance sheet. So we kind of talked about cash, where are your liabilities at? A good thing for some business owners, what's your quick ratio or your current ratio? Take current assets, so money in the bank that you could cash out today. Tell me what your current liabilities are and divide those into each other. So if you get a positive 1 or higher, that means you have 1 times the amount of cash needed to pay off your current debt or current liabilities.
Yep.
So we always want to see, at least a 1. 3 would be awesome, right? So there's the balance sheet. That tells you where the numbers landed, how they ended at the end of the month.
Is that ratio, say that 3-to-1 or a strong ratio, so current cash assets that could cover current liabilities? If it's 1-to-1, you have $100,000, you owe $100,000, you could zero that thing out. It's basically if your business closed today.
Right. Could you
If you're
afford to pay off
1-to-1,
its
you can close it
outstanding?
out. If you're under 1, you're anteing up.
Yep.
If you're over 1, you're going to walk away. Right.
Exactly. And the big thing with the currents is we're only looking at things within a year, right? So current asset is, bank account cash. It's going to be in my hands within a year. Current liabilities, my credit card is probably going to be paid off within the year, right?
Yep.
Car loan, however, that could be a 3 to 5 year type of thing. So that's going to be more of a long term. So we're really talking like short-term cash, short-term debt.
So you'll pull in ARs that are due and short-term payables
Exactly.
to find those ratios.
Yep.
Okay. Yep.
And so, that's kind of the balance sheet, is seeing where did we land. We always go to the profit and loss next. And so that's the big one. People think it's the most important. I would argue it's probably the least important out of the 3 financials we'll talk about. Obviously, it's super important, right? Business have to profit to continue. But the thing is the profit and loss, it leaves off so much stuff. And so let's talk through that, right? So we see income. We'll see our cost of goods sold, what we have to do business. And then we'll also see like general operating admin expense, everything else, right? Rent, payroll, all of the things. We always look at that and we go to the bottom, right? So income, COGS, my expenses. I have a positive number. It's $1,000. I'm a profitable business. That's usually where it stops for a lot of people. The problem with that is, let's use the example. You did $100K in revenue $90,000 in expenses, you've got a net profit of $10,000, right? That $10,000 does not tell you anything that happened on the balance sheet, right? So one of the biggest questions we get, especially starting out with a new client, is, Steven, my profit last year was $100,000. Where is that money? It's not in the bank.
Yeah.
It's on the balance sheet usually. And so that can look like a few different things, right? Did you buy a new asset, new equipment? Did you increase some loan? Got a new loan.
Distribute it, right? Did you just take
Did you take an owner distribution out of equity?
See people dip in funds like, I pay my mortgage. I'm like, no, don't do that.
I think that's a really good topic too on the P&L though.
Do you need a new roof or new paint job on your home or business and live in Northern Colorado? If so, check out one of our sponsors, M&E Painting and Roofing. We've been around for 20 years here in the community, and full disclosure, I am the M in M&E. Check them out at mendepainting.com. Are you a business owner who is struggling to understand and navigate the world of digital media? If so, check out one of our sponsors, Imprint Digital. They are the go-to source for everything digital related to your business. Not only are they a sponsor, but they also take care of all of our company's website. They produce this podcast, and I highly recommend them. Check them out at imprint-digital.com.
Let's structure a business to get it sold in the future, right? Let's say in this scenario, let's just say these are complete fake numbers. We're going to create a fake business for Matt right here today. P&L, we'll use the same. It's got about a profit.
What should the business be, Joey? What kind of ideas have we had?
The kidnapping business.
The kidnapping business? So we have an idea about kidnapping people to do high-level coaching.
Okay.
But they know they're going to be kidnapped.
Okay. If they know, I think I'm cool with that.
We're about to vet this and put some numbers to this. Okay.
Satellite Strategies does not condone kidnapping in any form.
No, but at some point in 30 days, you got to give backstory. Some point in 30 days, like you need to get some coaching, like high level deep dive.
Yeah.
And you're going to have your bags packed and somebody's just going to come. You might be right here. They might come, let's go. And everybody in your life has agreed to it. You're going at some point.
Yeah.
And I talked about it with somebody.
Okay. Well, let's use this business as an example then, Matt. Let's say you've got this business on the P&L. Right now, you're paying yourself a salary. You're keeping it pretty low, right? What we see a lot is that business owners are taking, pretty heavy on the draw side. On the salary side, $30,000, $20,000.
Yep.
According to the IRS, your W-2 salary should be something that's considered, reasonable,
yes.
Fair for the industry. I think an important thing to think about is this kidnapping business, right? It makes $100,000 a year top line. Right now we've got $30K in payroll. We're still profiting about $10,000. That's good. We're showing a profit. We want to go sell this business, right? I forgot to mention that Matt, the owner of this business, you are working your butt off. You're working 40, 50 hours a week.
It's a lot of work to kidnap somebody. We got to drive the van around, go grab them. It's a lot of gas expense.
Yeah, it is.
A lot of time.
So I've expressed some interest. I think I might want to buy your kidnapping business, right? I go get your financials, and I see on your P&L that the owner was paid $30,000 on a W-2, and that left you $10,000 in profit. To me, you don't have a profitable business. I'm not interested in buying it.
Expenses, right? But we're net showing 10. Yep.
For me to be, a full-time employee for your business, to run that business truly, I'm not going to do that for, $40,000, $50,000. That's going to be a full-time salary. And so if you're not truly allocating that in your profit and loss, you're not showing the true valuation of what your business is doing. Because in order for you to sell now, they have to replace that full-time position. And I can't guarantee that they're going to be okay with $30,000 a year,
And that's why it has to be fair and reasonable. It's fair and reasonable so that if you sell, that's a fair number to be recaptured. And you're pulling a low salary, so you're not catching some of those taxes on the distribution.
Yeah.
But if you get pinged on that, if your business made $200,000 bottom line, you paid yourself 20 of that as a salary, and 180 is that's not fair and proportionate.
Yeah. Mm-hmm. A general rule there, we just say 50%. If you want your take home to be about $100,000, then set up a W-2 of $50,000, set up a draw schedule for $50,000, and you're good to go. But kind of back to that, it's like, so we had the balance sheet. We know we check that first. We have something to tie out. Everything should match. If it doesn't, don't look at anything else yet, because you have to get that balance sheet right. The profit and loss, it's great. It's going to tell us operational profit. My business, based on, whatever type of business it is, expenses backed out of the income is this profit line. That does not tell you how much cash you made or lost or that has nothing to do with cash. That is operational profit. And so that's why the number 3 report, I think to me, probably the second most important is our statement of cash flow.
Yep.
So what it does is you're going to start with that net income from the P&L, right? So I think we said $10,000 was our example. We'll show $10,000 net income, but then below that, it's going to factor in everything else on the balance sheet. You buy an asset, pay down a credit card, pay your sales tax liability, take a draw, anything that happens, on the balance sheet side. Turns out, after all of those draws you took and after that asset you purchased, although you had that net of 10, you actually decreased your cash levels last month by $55,000, let's say. And so that is, that answers the question of where's that cash at?
You
I had a net of what? Where is it?
Sitting there. Yes.
You took a draw or you bought an asset or it's on the balance sheet. And so that, I just can't express enough how important it is for a business owner. You're not an accountant and you're not expected to be. But also, if you can't read those 3 forms and truly make a plan and know what to do now, then you could use some support.
Or if you have them and they're not accurate, then you're reading the wrong information. Or if they're lagging, in certain businesses, things move fast. And by the time you figure out your numbers from 90 days ago, you just, burned another X amount of dollars or made the wrong move or the wrong call.
It's so important to have trust with your accounting team. You're handling all of their money, so you have to have that bond and trust. And if it's not there, then you can't get the job done.
So the niche where a company like you guys, so Satellite Strategies comes in, it's you've got some team members, you can come into a big company like us, you can come into a smaller company. I'm sure you can be with smaller companies than us, bigger companies than us, but where's that point where somebody starts to need you? Is it a revenue level? Is it a top line level, a bottom line? What is that magic point where, you'd love to be with every business from the beginning, but some just don't have it, right?
You can't afford it at first sometimes.
Yeah.
That's really common. For us, I think there's a lot of value in small businesses, right? Because they start out as this small client that you're really helping create the process, write it down, figure it out. And then this client grows into a $10 million a year business and you get to grow with them too, right? So I wouldn't say there's a number that you have to hit. If you're a business owner, a trade, or it doesn't even have to be a trade. If you're a business owner and you want to know how to grow, how to do better, if you want to know what's normal for your industry, right? These are all things that you should really have that professional for.
So I've got a buddy, he's got a photography business. We'll just use that example. You come out, first year you do 40, 50K top line. It's just you doing everything, right? You look at a business like that. How... You could engage with them, right?
Yeah.
How much are they going to spend with you? Because I think they think it's going to be multiples and multiples of thousands of dollars.
Yeah.
But you come into a business like that and you're a couple hours a month, right?
Yeah.
So you're talking,
Yeah, so we've made some packages for, the smaller people who know they need that person, but maybe they can afford it on a quarterly basis and not a monthly basis.
Yeah.
We've definitely done tons of packages like that. General rule of thumb is that we do a flat rate package with all of our customers. The biggest goal to that is because we have a lot of promises to our customers. You got to hear some of them, about a week ago. We have a lot of promises to our customers as far as our involvement, our communication. I think that there's not a number, right? If you're a business that has goals, you want to do better, you want to know how other people are doing and want to hear tips from an accountant that's working with, 40, 50 other businesses doing it, now's your time. So the benefit to us, I would say flat rates typically start around $500 to $600 a month. And those are typically the clients that, definitely much smaller scale. We're going to meet with them every single month, generate monthly financials, payroll, sales tax, Secretary of State compliance. There is a cost there, $500 to $600 for a business doing $5,000 a month. That's 10% of your revenue, right? That is a large cost, and we do recognize that. Internally, we also have a goal with all of our customers is I'm going to save you whatever your flat rate is. Just give me some time, right?
I was just going to say, so there's a gap and a faith bridge that they need to have. So you're going to save, obviously right off the bat, they're not having to do that. So they've got their 2, 3, 4 hours a month, whatever it is, to go sell and do what they're good at.
Yep.
But then you're going to find, hey, you're wasting here, you're spending here, you could do this here and strategize here.
Right. What levers can we pull? What's your 3-year plan, your 5-year, your 10-year? How do we get there?
Well, that's cool. So getting into this, you moved here from down south.
I did, from
You
Alabama.
Came to Colorado from Alabama. We were talking offline. You grew up in a super, super small town, came out to Colorado, just a dream to be. Did you dream to build a business? I know you wanted a different environment, a different life out here than some of the stuff you were going through. So just talk about what got you here to Northern Colorado, and you're excited to stay here, which is really cool.
Yeah,
like I love how you
sure.
want to be part of this community and help uplift businesses. So yeah, share more a little bit about that.
I think looking back, there's tons of signs of the entrepreneurial blood inside of me. I had a neighbor that was a friend, and we're probably like 8 years old. We had a pond in the backyard and a lot of tadpoles in it, right? We took the tadpoles around the neighborhood and we're selling them to our neighbors. And we made some money off of tadpoles in our backyard,
You were
right?
hustling tadpoles
I was
out
hustling
of the pond
tadpoles
in
at
Alabama?
8 years old, 10 years old. So, yeah, I mean, it definitely was a big shift going from Alabama to Colorado as far as the people, the feeling that you get when you're out in public. I think I find myself being a lot happier here.
Yeah.
There's tons of stuff to do in Colorado. You can keep yourself busy. Overall, I think me and my business partner, Drew, received a super warm welcome and immediately just jumped into an awesome community. Yeah. And so, it's hard to think about being anywhere else.
But you knew like 8 years old, you're like, I'm doing business. But just in the blood?
I did, yeah.
Kind of a thing? Yeah.
Oddly enough, I went to college, right? And I started off, I was a music education major. My first 3 years of college, got to, the last year of college and was like, oh gosh, I don't know that I, one, want to go teach children, but then two, also do it for, $35,000 a year. And I had a lot of troubles with that because I love music. It's so fun. I think that's probably some of the best relationships I found. My business partner, for example, Drew, we met in college marching band in Alabama in 2014, so a little over 11 years ago. I've pretty much always been in some kind of leadership role too in all of my careers. So I think all of the signs were pointing to you're going to own a business. But since 15 years old, starting with Old Navy was a key holder, a shift supervisor essentially. My next job after that was CVS. Within 8 months, I was the assistant store manager. Was like, okay, I'm done with management. I'm going to college. I'm going to be a bartender. Within 3 months, I was the general manager of the Ruby Tuesdays. And so
you can't just work entry level, can you?
No, it doesn't work for me. It really doesn't. But I will say Ruby Tuesdays, interesting career for sure. But that is something that I use every single day. The two most common clients that we work with right now are construction and then the restaurant kind of coffee industry. You would be so surprised. The look on some of our business owners' face when we get into this monthly finance review, and what's your food waste last week? How much? What's the dollar? So the restaurant life, as terrible as it was, there are tools that I got from that are helping me in the accounting world with my clients every single day.
So that Ruby Tuesday experience gave you the tools that you now bring in to help these businesses.
Yeah. I think, that and just being in a mix of some kind of, a leadership management role, I feel like I've, been in some kind of seat like that for 15 years or so now. And so, taking the music, taking what I learned at CVS and the Ruby Tuesday, I've seen big scale businesses. I've seen some small scale businesses. I've seen what doesn't work. And, I got to put all of this together to create mine and Drew's vision, Satellite Strategies. And it's really funny because just about a year ago, we were in our kitchen planning on the walls, the big sticky notes, year 3, year 4, we were going to hire our first employee. We thought we were going to be at about, 7 clients at that point.
Right.
After 42 days of having our own accounting firm, we were both making more money than our salary jobs that we had at the accounting firm that we had been at for years and years and years. And, it's not just about the money too, but it's the fact that we're a team of 5 people now. We've been a business for 13 months, and I think we've tapped into something that it's really neat. The growth we've experienced has been awesome, and I think it's really related to those missing points, right?
It was cool when you guys came in here and you sat down and you had a little postcard of all the
year in
stats
review
and the year in review, and was it 32 total or new clients, and got everybody's things done on time and accurately, and here's the growth and here's the plan, and that was just super. That was super cool to see.
I'll take the bragging moment for sure.
Yeah.
As an accounting firm, the big thing is getting your taxes sent to the CPA, get the books to them, right, so that they can get that return ready. It's pretty common for a lot of business owners to do an extension, right? It takes a lot of time to get all of that stuff together. All 32 clients at Satellite Strategies were submitted to the CPA ready for tax prep before January 31st.
Yeah, that's unheard of for a
It
lot
was
of
pretty
businesses.
cool.
That's
Drew
really
and I
cool.
did work 24 days straight in January. We worked through it, but we got to February and we were done with 2024 and could focus on what's your plan this year? How do we get there?
Well, I know the CPA's leading into April, so like January, February, March, they're crazy. And then do you guys have a downtime where you just take a breather? Like how do you, in an industry, you're always doing bookkeeping, but when that press is on for the big deadline, do you guys pull a couple weeks or month, or have you found that cadence in business? Like Mike talks about the 1 month vacation from Clockwork. What are you guys doing, if anything?
So January and February is the hectic time, right? It's just ensuring everything makes it to the CPA. Accounting and finance never stops. We're doing monthly financials. All of our companies have payroll, right? We're always busy. January is just like we have the full-time job, plus now the 1099s, the W-2, CPA communication, year-end reviews. I would say that, we kind of really nailed out our process this year, which felt really good, building out, the CRM, having the task there, the double checks, and just ensuring we have it all in place. And it really worked out for us this year. And so I'm excited to see, 2025. What if we take on another 30? We're still going to have that submitted by January 31st. We're going to set the standard, and that's what it's going to look like.
What's the plan for growth? Like, what's the big goal for Satellite? You guys have the BHAG, they call it.
Yeah. So, funny enough, we thought year 10, we'd probably hit that $1 million a year. That'd be our goal, right? Mm-hmm. My goal is $1 million a year. I want to hit top line revenue $1 million. Yep. We're going to do it next year.
So you're talking 24 months in, or you'll be end of next year will be what?
End of next year, we'll hit $1 million.
But that'll be how much time will you have from when you started? Is that 3 years in, 2.5 years in?
3 years total. Yeah.
3 years total.
Yeah. So we've just completed awesome. 1 year. I know what's going to happen this year. If nothing changes, we are a little bit above track than we should be, which feels fantastic. And then, I think that's the big goal. Let's hit the $1 million. Me and my business partner, we've both been in those roles where we're in those leadership roles. We're working 50, 55 hours a week for a company that is not doing much for us, right? And so it's really cool that it's our company now. It's successful. We've got a team of people who love working with us, and we love working with them. And I don't know, it feels like we've created something really, really special.
Love that.
Yeah.
So you were, we have a lot of listeners, and I just know people listening to this specifically right now, they're working long hours for somebody else, building somebody else's dream.
Yeah.
Right. And there's value there. Like they're taking the risk. They're putting out the money. You're building their dream though. And they always talk about, hey, I want to get out.
Yeah.
It's like, and they talk about it. You have that friend like talks about it all the time.
Yeah.
So you're going to do it or not.
Yeah.
So how do you do that? How do you make that happen?
Just make the leap. Just do it. Rip the tape. It's time to do it. Make the change. For me, I think it was awesome working at an accounting firm for a while, getting that experience, figuring out what are the pain points, what are business owners missing. So it was really cool to see, the missing piece, right? I found something that we could create and sell, and sell, but also provide crazy value to the customer, right? Help them grow their business.
If you're a Christian business owner in Northern Colorado, check out one of our sponsors, the Foundry Advisory. The Foundry is a Christian peer-to-peer advisory network where you can plug in as a business owner, not only to talk about how to improve your business, but how to integrate your faith. Check them out at thefoundryadvisory.com. And remember, they're not only a sponsor, but I'm also a member of their group. If you have a story to share and you're thinking of becoming an author to do so, you have to connect with one of our sponsors, Scribe Media. I worked with Scribe to publish Painted Baby, and I'm currently working with them again to publish my next book, Pour Into People. Click on the link in the show notes below to connect with them, and they'll actually give you a little something extra because you came to them through me.
So my question is, why do people establish a W-2 salary and take an owner draw?
Yeah, great question. The biggest thing there, we got a question is why take a W-2 salary and also take a distribution? Biggest answer there is payroll taxes, right? So as an employer, you're going to be required to match on Social Security tax, which is 6.2%, Medicare at 1.45%. You're also required to pay federal unemployment at $42 per employee, state unemployment in the state of Colorado, which I'm sure employers have noticed, but everybody's rate is increasing every year. We can thank COVID for that one. So unemployment tax, federal unemployment, the Social Security, Medicare, paid family medical leave in Colorado. So there's a lot of taxes, right?
What is that on the dollar? So to pay a dollar, you're paying another 12 cents on the dollar?
We'd say about 12% on average.
12% on
is
the
a
dollar.
good-
Okay.
Yep. And so the problem there is, right, like if you're giving yourself that 100K salary and also taking 100K in draws, just the payroll taxes for that 100K is, $12,000. And that's also not, we're not talking about insurance yet, retirement yet. You have a 401K, a 401K match. So the cost for an employee, it's very, very expensive. And that's why so many businesses, hang on to that 1099 role for a while or that contractor position is because, depending on the state, there are so many taxes. There are, requirements for insurance and retirement.
Yep.
And so to kind of answer the question, we want to find that good split because distributions, right? There is no tax. If I take a draw of $1,000, $1,000 is deposited, into my personal bank account.
Yep.
There's a lot of confusion there of like, when am I taxed? How does that work? I'm taking a draw. I think the biggest thing is to be comfortable and know what is your net income, right? If I've profited 100K, I'm being taxed on 100K. If I draw out $90,000, I've still paid taxes on all $100,000. Obviously, you don't want to draw out all the profits because then there's no money in checking. There's no money in savings. But, short answer there's a lot of payroll tax, a lot of cost associated with having an employee. So you kind of have to find that fine line.
Well, don't you see some? They don't pay themselves a payroll at all. They just, and they're not even an S corp. They just let it all roll to their 1040, and they get hit with what is the self-employment? Like that's the hardest way to get hit, right? That's the worst thing you could do.
Yeah, you've got a profit of let's say it's $100,000, right? You're probably going to owe $30,000, $33,000 in tax liability. Yep. Same scenario, except you paid yourself $60,000 in W-2 salary, added in the payroll tax and the retirement. That probably came out to,
$7,200 extra, right? 12%.
Yeah. So look at how much you would have reduced the profit of the business, reduced that taxable income because you paid yourself. It's a beautiful thing.
Yeah. Well, and then you can establish that you have you can still establish that you make money with a tax return, but showing a consistent W-2
will always be easier.
Is going to be easier for loan process, things like that, right? If you're going out into that world. Does that make sense, Joey?
Yeah, Matt. Do you pay yourself a W-2 salary out of M&E?
Yeah. So, we have the holding company that owns all the companies. So I pay myself a W-2 salary and take distributions.
Got it. I only do like an owner draw out of my business.
So you've got all your top line money coming in, and then you just draw money.
Yeah, I just draw money.
Sole proprietor? Do you have?
I'm a sole proprietor LLC.
You're paying a whole bunch of taxes that you shouldn't be.
Yep. It's very possible.
You should fix that. You should take Steven to lunch and fix that pretty quick.
That sounds great, Joey. Yeah, I think the biggest thing to look at there.
They're like, do what? Yeah, because that's the highest tax rate.
Right.
Everything passes through.
Look at your profit. If that can support a salary, you should be an S corp. You should have a W-2 salary and take the distribution side too. So let's talk, Joey.
But you're using that number of $100,000. There's some new business that they're like, damn, I'd kill to make $100,000. So what if like somebody's got a deal going? They're making $40,000. You can take a $15,000 to $20,000 salary. 20 will cost you another $2,400, so $22,400 out of that 40. The other $17,600 is your profit,
right?
And you're still your federal and your state,
yep,
right? But you're paying a little bit of payroll on that 20,
and that's
22.
The benefits throughout the whole year. You've paid that Social Security, you've paid that Medicare, some federal and state tax. Another way to also look at it, Joey, this is for you too. Let's talk retirement, right? Social Security. Let's say it gets, it's that time. In this example, Joey, if you're just taking distributions, you haven't had a W-2 salary, right? So you're not paying anything into Social Security. When it's time for everybody to go retire, that amount that you get is based on, I believe it's your 5 highest years of W-2 earning. Right. So if the highest you've ever made on that W-2 is that $30,000 or the $40,000, you're not going to get as much of that Social Security benefit as if, you 100K salary, 100K draw. So yeah, it's important for so many different reasons that, the value of the company, your future, your retirement, it's really, really important.
So there's this short term, just set it up correctly, but then you're taking Joey 30 years down the road to retirement and it all matters now.
Right.
Yeah. Really cool. Really cool.
Yep.
That's wild. That's crazy. My biggest thing is I've always looked at that P&L. That's the one I love.
Yeah.
But that's not necessarily the most important one.
It tells you on an operational level, this business is generating a profit, which is great. But if you're taking that profit and pulling out 2 times the amount each month, you could be damaging your cash.
Yeah. So what's been, as a new business owner, what was like the biggest surprise that you came across that maybe was unexpected or you didn't see coming down the pipe? Because you're running somebody else's business, doing that really well, and then boom, fast growth, more clients than you know what to do with in a really quick time. How did that all shake out?
I think the biggest thing I've learned through this is that, we can control growth to a point, right? As people, we are never going to stop growing. We are never going to stop learning. And I, as a business owner, have to be sure that I'm not falling into old trends. Like, I'm doing this because that's the way it's always been done, or, whatever it may be. The biggest thing is, I'm learning every day how to communicate better with, this specific client or this employee. That's been a huge thing, is, having the 3 other employees with Drew as well. I feel like we're always learning. Like, I know that I can speak, this person receives it better when I speak in this tone or this language. My other, one of the other employees, there is no beating around the bush. If you're unhappy with something, you have to say in the email, I am unhappy. This is not good. Let's fix it, Yeah. And so that's been big for me, is that, I've realized that this is never going to stop. We're always, maybe we'll have a new employee or a new client, or maybe the tax code changes, or we have to be on our toes. We can put processes and systems in place to feel like, we can check out to a point, but also on the same leaf, it's like you can never stop adapting and changing and growing.
And there's the human component. It was funny. I was joking. I'm like, you were geeking out at our conference table about numbers and spreadsheets, and you're like, I have 37 questions and I'm answering them, and you're fixing them there, and you were just like, you should have seen him. Joey's like freaking out. Like, I hate this stuff. I hate even being here having to answer these questions. Yeah. I just want to know, like, I want to go sell stuff and tell what are the moves we make. But you're geeking out on it, right? Like, that process part of the business. But there's also this human component of how do you take all that data and relate to that specific business owner to have it make sense for them, and then have them make the right decisions.
Yeah. So our internal goal is like that monthly review that we're doing with each customer. I'm going to tell you what I see in this financial picture. If this were my money, I might move this here or that there, maybe put more money in advertising. But that's been the really big thing, is that we've been able to see a lot of businesses put a little bit more focus into this, right? Pay a little bit more attention. The amount of change that we've seen for some of these businesses in 3 months is, they're different businesses, right? We've worked with, some restaurants or coffee shops that are, they're starting with us as a business that today's payroll, we're a little bit short. We're going to put a little bit of money to make payroll. We've met with them for, 5 or 6 months. Let's reduce COGS. How can we pull down payroll just a little bit? What can we redo to the schedule to change it? This is a business that now has a savings account, a profit account, a tax account. They know that they're a profitable business because they can see that in that profit account. So shout out again, Mike McAllowitz.
Mike?
You rock.
Don't hang out with Mike. He will try to kill you by locking you in a sauna.
Okay.
Did you watch that yet? He tried to kill me. Tried to kill me.
In a hot sauna?
In a sauna. He locked me in there, threw the steam in, ran away. It's crazy.
That's crazy.
He'll be out to visit sometime soon. I think hopefully he'll be out. You better come out. See us, Mike.
That'd be great.
What's been the craziest thing somebody's tried to write off in their business?
A boat.
A boat? You can write a boat off, can't you?
If this is like a water-based business, maybe like.
What if I want to do coffee bars on a boat?
I think that would be a legitimate discussion that we could have.
We do that, Joe.
I think boats probably the biggest thing during the PPP era, if you remember that, right? Where we definitely saw a lot of getting the loan and then building a new pond, a new backyard, new house. Using money inappropriately, essentially.
But anything, whatever, big, small, whatever, you've got to justify that you use it for the business.
Yeah, sure. Yeah.
Is there anything you just can't ever write off? Like, I've heard like clothes. You can never write off clothes. Like certain things that are never, ever able to be written off.
Uniform is very tricky. So for uniform, it has to be something that's not a normal, you can't wear it in a normal day, right? So if I go buy scrubs, I can absolutely, well, I can't. But if I were a nurse and I go buy scrubs, I can write that off for sure.
Yep.
Steel toe boots, right? Because I'm out in the field and want to protect myself. That's kind of out of scope, or you don't wear those to Walmart, right? So it's really, really specific. So more like protective gear, required type of things. If you just go to Kohl's and buy some new jeans, definitely not a write-off.
Okay.
Yeah.
Okay. And then what are some things that businesses that you see consistently that they don't write off and they don't realize that they can?
I think we talked about it a little bit, but that owner wage, taking those draws and not paying themselves truly is a big thing. Advertising and marketing, if you're a startup business, I would totally recommend to stay around 1% to 3% for your advertising budget. So, Google ads, Facebook, Instagram ads, really, investing in your business, right? Yeah. That advertising and marketing piece is really important.
Love it. Well, man, thank you. Thank you for coming on. We've talked so much. We talked so much offline just about like your personal journey and moving here and growing up and getting into business. We dove like deep into accounting here.
Yeah.
I just don't want to see any more accounting for the rest of the day.
Love it.
After these last 2 weeks, man. So what else you want to wrap up with? Like you're just pumped to be here in Colorado, helping a lot of businesses.
Yeah.
Got a big vision, big goal, great team.
Yep.
Hanging out, having lots of coffee here.
Exactly. Great coffee. Yeah. I mean, I definitely have the visionary energy, right? The entrepreneur, we're going to grow and we're going to meet that goal. And then we're going to set a new one and meet that one too. I don't think that'll ever stop for me. But I think that's also what's really exciting, right? We're never going to stop growing. We're never going to stop learning. I think it's really awesome that me and Drew have this opportunity where we've created our own business and people around us are really seeing the true value in it. Yeah. And I don't know, it's been so rewarding, like working with these businesses and seeing the direct change and increase in profit or, whatever it may be, just getting them closer to that goal. It's been really cool to know that, we're a big part in that.
Yeah. Do you ever tell them to park aside, like, hey, we just saved you this much, you grew this much, park this much aside, go throw a big party? Do you
all the time?
You have them do that?
Yeah. We love the owner's comp account, right? The profit first again.
Yep.
I'm the first person that says, there's a balance in there. Why haven't you taken a draw yet? And then I hear, I don't need it this month. Let's save some cash in the business. Nope. You're transferring this to yourself or I'm logging into your bank and making a transfer right now to your personal account.
Love that.
So yeah, you got to pay the owner. Yourself running this business, there's nobody that's going to show up to work without a paycheck like you will. There's nobody that's going to work the hours that you will. It's going to be really hard to find people that care as much as you do about your business. And that's also where I think Satellite's been really, really lucky, as the 3 team members that we have are in this for the long haul. I think that's kind of what I want to address too, is that, we started off an accounting firm. January 26, 2024, we're an accounting firm. It's awesome. It started. We get some clients. Day 42, we're doing awesome, right? 6 months in, we realized we are an accounting firm. We are a finance firm, but we're also more. We are a small business firm. That's what we do. Yeah. And so what's been cool is that, I thought we'd always just do accounting and maybe some taxes and payroll. This year we've gotten to hire, shout out to Kelsey and Keelan, our CMO, so a chief marketer. And then we also have our director of operations. Yeah. So pulling all of these pieces, it's pretty insane what we've seen serving on some leadership teams, having that director of operations and your CMO and that finance person. Obviously, we're close and we're friends and we're really good at communicating together. But I think a lot of business owners don't realize how important that communication is. Like the CFO, right? They're going to control the cash or know where it's sitting, where you can put money in and where you can't. Director of operations. So with Kelsey, what she's been helping with is, for example, I've noticed at your coffee shop that you're walking to the back 47 times in one day to get this big stack of cups. If you take these cups and you store them right here instead, that's going to save you about, $890 in payroll labor a year. Let's figure out the process.
Like down to
Write it
steps
down.
for coffee cups.
Exactly.
Yeah, literally. Mm-hmm.
So it's been really cool. Like, we can explain the finance and the profitability, but it's also like, let's help you write your process. Let's create the process. Then let's advertise it on the internet. And then the last thing that we've really added this year that's been, I would say, the chef's kiss to Satellite, we have a CPA partnership. And so, the biggest missing thing that we saw with our experience in the firm life together was, I've created your books. Here's your financials. Here's your tax return. You owe $23,000. I'll see you next February. And that was it. It just stopped there, right?
Yeah.
And so I mentioned like our business promise, we're going to meet with every single customer on a monthly or quarterly basis and explain, the big financial picture. Well, we have this CPA partnership now. And so she's also present in every quarterly meeting. And so the magic that we've seen from that, right, is that I'm sitting here like, let's put some more into advertising and marketing. You're not at 1%. Payroll contractors are a little high. What can we do there? Maybe we can instituted a 1 hour lunch for everybody, 12 to 1, reduce some payroll cost. And then she immediately comes in and is like, yes, 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 but also you don't have any depreciable assets this year. Maybe you should go buy that company vehicle. We'll take the Section 189, fully depreciate it this year. You write off $50K extra. So it's like what we have done is created a package that ensures that communication. We have a meeting every single month on the calendar. Every 3 months, the CPA is also here. She also knows throughout the year, right, what's happening because I'm sending monthly financials. So she's looking at it, getting her wheels turning. She comes to that quarterly meeting and it's just, there's no more getting to January with anxiety being like, what's going to happen? What's going to happen? How much do I owe? How much do I owe? We've had 12 meetings so far, advising and structuring, like, what do you want that to look like? Do you want to get a refund? Do you want to owe? Do you want to make estimated tax payments? So I think that partnership, Jess, shout out, Emerald Aspen CPA in Denver, that has been really cool to like mandate the communication, right? Like I'm here once a month. Let's talk about it. Let's figure it out.
Well, it's like, and you can't make decisions flying blind. So you're giving them the data to see that thing, and then you're getting out in front of it to make the really big calls. Yep. And you don't come across too many businesses that have partnerships and teams that get them that far ahead out of where things are going. That makes life and business and a lot of things. And then just think about the stress that you reduce because that all flows over to the family and everything else. And just entrepreneurs' health and just overall well-being. Yeah, because when money's messed up, a lot of other things. It's stressful. Yeah, it's stressful. Yeah.
That's been a really fun part too, is like, seeing that stress come away from the business owners because, when we start with them, we can tell a lot of times it's tense. Maybe it's because some bad things have happened in the past. Maybe it's because we don't trust you yet, right? We have to build this relationship and, it takes 1 month and, not even a month, I think, with Satellite. And I think our customers get it. But I think it's really important to evaluate all of these areas and be sure that you've got the right people, the right seats. Yeah. And if it's not an area you specialize in, that is okay. And it's, humble of you to admit that. Yeah. And that's why we're here.
Love it. Well, man, thanks for all you do. It was a great connection from Stacy. Glad I met you. It was perfect timing. Yeah. Now we're chopping it up on the pot. Are you staying for a coffee bar? Are you going to hang your coffee bar? Let's do it. Well, sweet. Well, we wrap up the show same way. Every episode, you've got one of your favorite colors and the statement you want to leave with the world when you leave it. Okay. What is it? My statement. We're never going to stop learning. We're going to travel the world and be a kind person. Love it. Stephen Davis. Thanks so much, That's Matt. A wrap. All right. Thank you so much for having me. Thanks for watching. If you liked what you saw, drop a comment below. Make sure to watch the next episode and don't forget to subscribe. If you're a business owner looking to improve your life, leadership, faith, family, and business, I've got a couple of free things that I'd love to share with you. So go to mattshoup.com and download my free tools. I guarantee these couple of things will get you started off in the right direction.